Asia-Pacific markets are climbing this morning, bolstered by a host of positive economic data in China. Retail sales grew by 4.6% in August from a year ago, beating expectations for 3% growth. Industrial production as well and grew by 4.5% in August from a year ago. That's better than the 3.9% forecast. Oil prices we are seeing are also rallying today to 10-month highs following this data. China's economic rebound from the pandemic has slowed this year, dragged down by a real estate slump. Exports, another key driver of China's economy, have also dropped significantly. Now, let's get more on this with Russ Mould. He is AJ Bell Investment Director. Thank you very much for joining us today. Russ, what are the drivers behind these data we've seen? To what extent was this driven by the recent government support measures that we've seen in China?
I think, given that there is still a large degree of state control over the economy, I think that it is logical to assume that government policy has had a big influence here. There have been interest rate cuts, reductions to the amount of money that banks can keep on their balance sheet, so banks can lend more. And there have also been changes to local mortgage rules. So I think they are all designed to try and boost confidence and boost the economy. But you've also seen a boom in Chinese travel as people have been allowed to move around after effectively 3 years of lockdown. So that will have helped as well.
Overall, would you say you're optimistic on China? We've seen a significant slowdown after the second quarter, especially for what concerns real estate, but obviously not only. Are you optimistic for the end of the year and next year?
I think one thing I'm fairly confident in saying that I don't think the Chinese economy will collapse, and that some of the coverage of the country's economic problems are probably overblown. Equally, I do believe that there will be a fairly lengthy and fairly painful adjustment in the Chinese economy. A lot of their growth has been built on cheap debt that has gone into infrastructure projects, and I think there now needs to be a rebalancing, an attempt to control that debt, and probably more of a focus upon consumption. And so effecting that shift while trying to maintain financial stability and support the currency won't be easy, but I don't think it means the economy will collapse, no.
Russ Mould, great having you with us on the programme.
Thank you.
And now let's get to the top stories from around the world. Economic growth for the group of 20 nations has slowed in the second quarter as the fight against inflation continued to weigh on activity. Gross domestic product in the area grew by 0.7% from the previous quarter, down from a 1% expansion in the first 3 months of the year. Turkey was the fastest growing country among the group, with a 3.5% increase in GDP. Uranium prices have surged to their highest level in 12 years, signifying a resurgence in the global nuclear power industry. The commodity rose by 12% over the past month, reaching $65.50 per pound. The growth in uranium demand comes as governments from Washington to Paris seek energy independence after soaring gas prices due to the war in Ukraine. And British chipmaker Arm makes its stock market debut, becoming the most high-profile IPO that the Nasdaq has seen since 2021. The shares of the company climbed over 20% in the first 30 minutes of trading, and the stock closed up nearly 25% up. A star of the technology industry, Arm designs chips for devices including smartphones and game consoles. It estimates that 70% of the world's population uses products that rely on its chips.